How to add to winning trades. Hi, it's Charlie giving you Saturday's video. So this came from a question on YouTube. Okay, so I'm going to cover off some of the theory and then we're going to go into some examples on adding into winning trades. Okay, some general tips. You don't add on every trade you get into. It's only certain trades that provide the window to add into. So if you get into an average trade, so this is your entry here, and you've got a stop loss down here, and you've got a target here, or take profit here. That's what I would call, roughly speaking, that looks very much like an old, just a vanilla trade. A 1 to 1.5, 1 to 2 type of risk reward trade. Forget trying to add to that sort of trade. Okay, so the first thing that I would say is adding into winning trades is something that you're not going to do on every trade. It's on those trades whereby, yes, you've got your entry here, and you've got your stop loss down here, but your target is a lot higher up here. So the risk to reward is good. So you've got a lot of upside potential. And why do we need that? Because in order to add in, as the market starts progressing in your favor, you need to have been able to move the stop loss up. Okay. And you can't move your stop up as just after a couple of bars. You've got to be a minimum of, absolute minimum of 1-to-1 risk to reward ratio before you can move your stop up. And really, you don't just move your stop up just because you're at 1-to-1. That's just an arbitrary, well, it's at 1-to-1, so I move my stop to break even. You need to look at the chart. You need to do some technical analysis. This is what we do all the time in my community. So you need to look at the price action. The price action will tell you when you can move your stop up. But so as a minimum, as an arbitrary thing, you would be at least 1-to-1, possibly even at 1 to 1.5 to 1 to 2, before you're in the position to be able to say, right, I can now move my stop up to break even. Okay, so you need to be in that position to move the stop up. One thing that I haven't just said, and it is an option, is that you could move your stop up halfway to break even. So that's fine too. So the point is though, you can't add in until you've moved your stop up, unless your original entry, of course, was an undersized position, in which and so you're still looking to build the position because your early entry you didn't take your full risk, so you did an undersized position. So there are some factors at play there. So first things first, you price has got to have moved up. So in that case, if you were only targeting 1 to 2 risk reward here, let's say, and of course you can't move or add in until at least the price has been moving a fair bit, like I said, a minimum of 1-to-1. You then have to ask yourself, is it worth it putting an add in at that point when you're only targeting this? So, which brings me back to my point that add-in trades are not going to be on every trade. They're on trades where you're looking at greater than what, certainly as an absolute minimum, 1 to 3. Okay, 1 to 3 risk reward and above. So they're the bigger risk reward ratio sort of potential trades. Okay, so in essence, if we start again, here's our entry, and here's our stop down here, stop loss. Price starts moving in our favor. Okay, so and people say, oh, what exact point? There isn't like I said, there isn't an arbitrary, or when you get to 1 to 1.5 or whatever. You've got to look at the price action. You have to have a technical plan as far as adding in. But once you have moved your stop, whether it's been halved up or it's fully to break even, that is the point when you're at least in a position to then say, okay, I can add in. So then you have choices. You could, once you've moved your stop to break even, just add in at that, whatever the price is at that point. Or you could say, right, on the next pullback, I will add in. These are the things that are just, and I'm going to go through some examples in a moment, some actual examples of trades. So that again is down to the individual. It depends on what the price action's been doing and all of that. So we're going to go through that in a minute. A lot of the time when I'm adding in, I like to add in on strength. So I'm not a lot of the time, once I've got in and I've got the initial positions in, then I'm quite happy paying up as often. Say sometimes it might be, for example, as we've broken out above, maybe there was a prior high over here and we've just broken out through there. I might be using that as an excuse, saying, right, my stop's been moved, right, I'm in a position to do that. Because the one drawback to waiting for a market to do a pullback is what? Well, it might not. Sometimes they're on a really good run and you're sitting there waiting for a pullback to add in and it doesn't happen. Sometimes if your stop's been moved up, well, sometimes just pay up. You know, if the risk reward is good collectively, you're fine. Right. Now, what about the size of the add-in? Well, if your initial entry, let's say your initial entry is risking 1%. So, and price moves up and you get your stop up to break even. So your stop's now at break even, so you've got no risk on it anymore. So you're in a position to be able to add another 1% up there. But one thing I always say is, you know, you don't have to. You don't have to. Your add-in does not need to be a full size add-in. Your add-in could in fact be 0.5% at risk, half of what your initial trade was. All of these things are options, and it's only the individual that's going to know the answer to this. So what do I mean by that? Well, you know, lots of people don't feel comfortable once they're into a winning trade and their stops at break even. They're not massively comfortable about then putting a new fresh 1% risk on, and if it rolls all the way over, you get, you just end up with a 1% full sort of stop out. So they might say, well, actually, I'm quite happy adding half of my whatever your full size normal risk would be. Let's arbitrarily say it's 1%. So again, those are options for an individual. So what we're going to do now is just have a look at an example. I've got the pound dollar up here on a daily chart. So we're just going to have a look at an example, just going back to August, in fact. So there were some traders in my community who were getting long down in this zone here. In fact, it was on after that day there, I think it was. So it would have been here. Okay. So if we now, oops, just get my pen right here. So if we now, so they were getting long here, okay, with a stop at this low. Okay, doesn't matter, you can read into whatever I'm telling you all you like. I'm not going to go through the details of the whys or whatever. Yes, it was a nice candle, but there was more to it than that. So the initial risk is, of course, is that distance there. Okay, so that's the risk. Now, for cables, some of those traders had a target of 133, that zone there. So, is it a candidate for an add-in trade? Yes, it is, because we can see the risk versus the reward is pretty decent. Okay, in fact, if I go and put the risk reward feature on here, if we use the right one, long position from about there, drag that up down to about there, and then drag that up. Roughly speaking, what did it give? Have I got that right? Probably, yeah, about right. 6.5. Okay, so it gave a 6.5 risk reward. Okay, or 6.5 R. Okay. Oops, let's get rid of that now. So there was plenty of scope. So now you can trade that, high risk reward or decent, solid risk reward ratio trades like that. You can just trade them as they are. But that's not what the question is of today. So the point of today is talking about adding in. So you can then turn like I was just said, a 1 to 6.5 risk reward ratio into obviously much more if you get another add-in. So at what point can you add? So this was like I said, a real trade. Some of my traders were trading it slightly different to others, but certainly at this point here, technically, by the time we had this, there were things going on at that point. Price had run up a bit. It was certainly, yes, more greater than 1-to-1 risk reward, but that's got nothing to do with it. I'm just observing that because I've already talked about it earlier on. At this point, I don't think the stops were at break even, but certainly moved up a little bit. So there would have been an option for traders here. But I certainly know that there were other traders who were waiting just a little bit longer here. So at that point, the stop loss absolutely can be moved to break even at that stage. So there's the add-in there. So if I just go +1, okay. So there's the add-in. So where do you place your stop on the add-in? Well, again, comes from the analysis of the chart. I find people trading so mechanically and just saying, oh, well, I'll just use X, Y, Z. You've got to read the chart and elect where to put the stop on that add-in. So what we're going to do is we're going to say on the add-in, put the stop, say the stop was down here. Okay. So now we've got another add-in here. Let's use that feature again. So from a close up there, let's drag the stop there, drag that up to that target there again. There we go. So what does that give? A 2.5. So what it's done is it's turned a 6.5R trade into a 9R trade, and there you go. It's a classic example. Now, and actually, this is a really good example because, as we can see, the trader who's saying, "Well, it's broken up now. Well, I'll wait for a pullback." Well, you never got a pullback. It just flew higher. Now, there was ultimately a pullback before it obviously got up to the 133. So would there have been anything you could have done here? Well, this is quite interesting because at this point, let's assume that there was no other add-ins at this point. It's just going up and up and up. You've got an add-in here with a stop loss. The original's been moved to break even. Probably at some point during this, it would have been moved up to that same level as the second position. And you're just running it higher, and so you're on for a decent risk reward ratio trade. As it happens, there does become a pullback, and could there have been an opportunity within that pullback to add again? Yes, there could have been, and so possibly another bit on top. But let's actually say, you added in again, and because it did a deeper retracement, you got stopped out, but then it did a nice reversal here, so then you've gone in again. So you've had a stop out, but then you've added in probably over here after getting stopped out as it came down lower. So then that's more than equaled out the stop out, so maybe it's added net a little bit on top. So you're probably sitting at, what did I say, 9R to maybe towards 10R out of a trade like that. And I'm being really simplistic on this. I have traders who will be more aggressive than what I've just gone through here today, and they would have done a bit more. But that's the principles of adding in. So the principles are, you need to have a target and a larger target further away. There's no point in adding to trades that have a 1 to 2 risk reward ratio from the beginning. You can't add in until you've moved your stop up. Bearing in mind, you could move your stop halfway to break even, and that puts you in a position. So you can't add in until you've moved your stop up to some degree on the original position, and then it moves on, and you can do it for a long period of time, depending on the time frame that you're looking at, but you can keep doing it. One thing you have to always factor in is that at some point, whether this is a daily chart here or whether this is, you're not going to do it on a 5-minute chart, but whether this is a 4-hour chart, let's say, there's always going to be that point where price could do a larger retracement. So if you choke the trade and you move your stops up too aggressively, then you're not allowing for that potential pullback to come along. So you have to be careful of that. So I find myself in trades where I've built a bit of a position from adding in, but then not moving my stop. So I've got my stop down here. Yeah, at some point it might have been moved a little bit further, but I'll end up here and still with my stop loss way down here, because I know there's the risk of a bit of a larger retracement to come in just within the natural ebb and flow of things. So if you want to be adding in, you have to move your stops up in order to justify the add-in, but you've got to be very careful of just choking the trade and moving the stop too aggressively, because as soon as you get, as you add in, then you'll get a bit of a pullback. It'll stop you out, only to then go higher, and it will defeat the object of the whole exercise. Anyway, there's some general tips on adding in to trades.